Let's turn to the advisory. And as I mentioned, stock markets at record highs. Interest rates, they're coming down as we saw yesterday with the RBA. So what's it all mean for investors? Jonathan Eriksen is joining us from Barrington Asset Consulting. Jonathan, welcome to Ausbiz. Good to have you on the show. So,
Great, thank you.
if you've been riding these share markets, clearly you'd be pleased. Mind you, inevitably you do get nervous, don't you, when you see record after record?
Yes, and of course the timing of this interview is perfect because overnight the US Nasdaq and S&P 500 indices reached new record highs yet again this year. And our concern is not so much with the cash rates, which are coming down, and the Bank of England cut their cash rate last week. It's the RBA's turn yesterday, and probably the New Zealand Reserve Bank of New Zealand's turn next week. But all eyes are, of course, on the Federal Reserve, where Jerome Powell is under the pump. If he doesn't reduce interest rates, then something will be a problem. But our concern is not so much with the short end, but with the longer end of bond yields, because those are going higher, not lower. And at the moment, there's a 4 in front of the 10-year US Treasury yield, and it could even get to a 5, depending on how the debt in the US goes this year. Because under President Trump's big, beautiful bill, the debt's going to go up. And of course, their ability to repay it, apart from tariffs, is going down. So our concern is that what goes up in share markets must come down at some point, and we may be near the tipping point now.
Well, I guess the question is when. What's actually going to be the catalyst for that? And further to your point, Jonathan, in fact, overnight we did get further detail on that US debt position. In fact, the budget deficit growing 20% in July to 291 billion. That's despite the collections they're getting from tariffs at the border. But gross national debt surpassing $37 trillion.
Yes. Their interest bill alone is $1 trillion a year. And with the tax cuts, it's going to be very hard to cover that off. So the trigger could be any one of a number of things. We don't think that the financial markets are taking risks into account. And probably the biggest concern is actually the use of the National Guard, where effectively President Trump sent the National Guard into Washington in his latest move, and it was Los Angeles' turn a few weeks before. And you may remember in his first term, it was Portland, where he quelled a peaceful demonstration with the National Guard. So I think in that sense, investor sentiment will turn when people are so suspicious of what President Trump says and does that they realise that it may not all turn out as well as he thinks or hopes it will.
Well, you see this as a broader theme developing in terms of a power grab from the executive.
Yeah, completely. Yeah. So basically Congress and Senate doesn't get a look in anymore. It's all done by executive orders and tweets.
Yeah, as we see, seems to drop an executive order every day, doesn't he? So, Jonathan, the question for investors and then how you position yourself potentially if you're looking at a significant pullback.
Yes, so that depends on your strategy and how long term it is. Because at the moment, our advice to clients who need cash is to take it out of equity markets and perhaps build up your bond portfolio. But it's a little bit risky to just sell equities and not invest in anything else. And as I say, with the long end of the yield curve for bonds likely to go up as well, there isn't much scope there. So we actually like alternative assets such as private equity and private credit and insurance-linked securities.
Well, specifically, where would you be looking? And I guess regionally as well, where's the best opportunity right now in the private equity space?
Australian private equity in the small to mid-market expansion phase. We don't like the global private equity shops because they're doing these huge mega deals, which either work or they don't. And they're also subject to political interference, or in Europe, the risk that President Putin just keeps going westward or eastward from his side, I suppose, towards the Dutch border. So there are huge risks with that sort of thing, and hence our liking for Australia as the market to go into, because there's a lot of baby boomers in Australia who are thinking of retiring, and a number of tech companies and defense stocks, or tech companies which morph into defense stocks by putting guidance systems and software into missiles and that sort of stuff, which are on the up and up.